Hey, what's going on everyone? It's Griffin here, and if you're not having a great day, well, this video is surely to turn it around. Now, over the past couple of weeks, I have had an unprecedented amount of requests for a video speaking about investing in cryptocurrency, essentially what platforms and wallets I use to buy and hold crypto, and then also what the deal is with the QBTC and QETH funds. So I thought, you know what, this is probably a good time to make a video on this topic since the audience is obviously very interested in it, and we're seeing some massive waves in the crypto space that we previously have not seen. For example, massive payment corporations like PayPal are really starting to dabble in the crypto space by offering users the ability to start buying, holding, and even selling crypto, while also allowing them to use these digital currencies as viable forms of payment with significantly less friction in the process than what crypto has previously offered. Now, previously, this was actually one of the main reasons why I was somewhat reluctant to even view cryptocurrency as currency at all, because in my view, for a currency to actually be viable in everyday transactions in our societies, the currency in question needs to provide quick liquidity with lower volatility, and it also needs to provide the user with a very low amount of friction, otherwise it pretty much grants the currency useless. And up until very recently, regardless of what anyone says here, this has been the case and still very much is in a sense, where sending crypto across wallets typically has a high transaction cost associated to it, and it's also a pretty clunky process. But like with all technology and innovation, we are seeing a lot of recent innovation and strides forward in the whole cryptocurrency space, where more and more wallets, exchanges, and payment processing companies are trying to adopt crypto and make the whole user experience a lot more enjoyable and seamless. With that said, there is still a long way to go in the space before I see my grandma buying her groceries with Bitcoin or Ethereum, but regardless, we are seeing a tremendous progress. In addition to this, around a week back or so now, Elon Musk announced that Tesla would be converting roughly 15% of its cash reserves into Bitcoin, which by the way translates over into around 1.5 billion US dollars. I think this really shook the status quo and made people realize, like, wow, the man who is literally planning to ship people to Mars is placing Bitcoin on his company's balance sheet and will be accepting Bitcoin as a form of payment in the coming years for his actual products. And moving forward, while these types of headlines are most likely going to continue having an impact driving up and down the price of Bitcoin and other cryptocurrencies, I really do think that over the coming years, we will see an increase in amount of merchants who are accepting Bitcoin or other cryptos as forms of payment. And at the very least, we're going to see an increased amount of investors holding at least a very small portion of their portfolio in cryptocurrency. All this to say though that the main sticky point for me regarding crypto as an actual currency has always been the amount of volatility that crypto currently comes with, to consider it as a viable store of wealth when the main reason people are buying and selling it is pretty much just to actually make a return on their position. You can argue that the same is true for say gold, but in no way is gold or other commodities typically this volatile. Yes, the Federal Reserve has printed trillions of dollars over the past year, which absolutely has an impact on lowering the buying power now and in the future of each dollar in one's bank account. But still, I do believe that we have a ways to go before a large portion of the payments pie is done with crypto, because it's so difficult to value products in relation to a currency, or in this case, cryptocurrency, when the value can fluctuate up or down, say 20% even in one single day, whereas with fiat currency, we don't see it firsthand. Anyways, I just wanted to quickly share some thoughts surrounding crypto that I had, and today's video though is going to focus mainly on the different platforms that I use and would recommend for you as a user to buy, hold, and sell your crypto. And then we're also going to be speaking about some cryptocurrency ETFs that the audience has asked me to speak about for a couple of weeks now, which are the QBTC and QETH funds. Alright, so to answer the first and main question being which platform do I use to buy, hold, and sell my crypto, well, let's break this one down further into a couple of different platforms for some various different reasons. First of all, for individuals who may be beginners to the crypto space and don't actually ever intend on actually using any of their crypto holdings for payment purposes later on down the road, well, in this case, Wealthsimple Crypto could be an option to consider. Now, the reason why I say that you wouldn't actually intend on using your crypto holdings to ever pay for anything or make any transactions is because Wealthsimple Crypto isn't actually what we would consider a real crypto wallet. And if this is the first time that you ever hear about a crypto wallet, let me just quickly explain further. So just like with a traditional bank account to hold your cash, well, with your crypto holdings, you also need to have what's called a crypto wallet. And each different cryptocurrency that you hold, you will need a separate wallet for. It's kind of like as if you needed individual bank accounts to hold your US cash, Canadian cash, Japanese yens, etc. And just like with a traditional bank account that has an account number, a transit number, routing number, etc., well, in order to make payments or tell people where to pay you in crypto wallets have what's called a private and a secret key. And without getting super technical about this stuff, a wallet key is going to be about this long and essentially acts as the account number, where if you want to pay someone in Bitcoin, you need to know their wallet key and vice versa. So with that said, most wallets are typically going to have a key that you can use in order to make transactions and send or receive cryptocurrency. But in the case of Wealthsimple Crypto, this is basically just a platform where you can buy, hold, and then sell your crypto holdings within that same platform, but you can't actually ever withdraw or deposit cryptocurrencies into this wallet. This essentially further commoditizes these crypto holdings that are already very much seen as commodities where people are buying and selling them just to make money on the appreciation of the value of their holdings. And for those of you who are aware of my Ethereum mining rig, well, in this case, I can't actually mine any coin to a wallet that doesn't have a key associated to it. Otherwise, if you want to take your crypto investing to the next level and actually have a bit more control over the ins and outs of your crypto investments, then I would consider one of the following two platforms. The first platform I'm recommending here is called Exodus, and I'm not affiliated with them in any way, but this is the platform that I've been using primarily over the past year or so, and it's also the wallet that I actually mine to from my Ethereum mining rig. Up until very recently though, there have not been any buying or selling features. This really was just a crypto wallet where you could send crypto to and then hold it and then send crypto out if you wanted to. But very recently I've noticed that in a new update, they've now added a feature where you can buy Bitcoin directly on this platform and use Apple Pay to actually buy the Bitcoin. Now, another alternative that's really interesting is called BlockFi, and this is a platform that allows you to deposit cash into your BlockFi account, and then from there you can purchase a variety of different cryptocurrencies such as Bitcoin, Ethereum, Litecoin, and others, while also benefiting from up to 8.6% annual interest on your crypto deposits that are just sitting in the wallet anyways, like a super high interest savings account. It's honestly a pretty great idea, since other than your crypto holdings actually appreciating in value, hopefully during the time that you're holding them, this also converts your crypto holdings into somewhat of a productive asset where you're actually able to generate some interest income on your crypto holdings that are just sitting in your wallet doing nothing anyways. So if you're interested in checking out BlockFi though, make sure to check out the link down below in the description where you can get a $15 bonus with a $25 deposit all the way up to a $250 bonus as you deposit more into your account. So those are the three main platforms that I use and would recommend if you're looking to buy, hold, or sell cryptocurrency, and hopefully one of them can apply to your needs. But now let's speak about two relatively new exchange traded funds that have been highly requested by the audience, being QBTC and QETH, both of which trade on Canadian and American exchanges. These two ETFs allow investors to gain exposure to cryptocurrency without actually physically holding any of these digital assets in question, or I guess we would say virtually holding in this case, but they also allow investors to include crypto in a typical brokerage account like a cash account, a TFSA, Roth IRA, and so forth. Now, these Bitcoin and Ethereum funds are offered by 3iQ Digital Asset Management, and based on their fund profile, the goal here is to provide exposure to digital currencies and the opportunity for long-term growth by essentially buying and holding Bitcoin to provide investors with a convenient alternative to a direct investment in Bitcoin or Ethereum. So essentially, it's like a gold fund where the asset management firm is buying up a bunch of gold, and in this case, Bitcoin or Ethereum, and as an investor, you can buy into the fund and therefore gain exposure to the asset in question. In this case, 3iQ's BTC fund currently holds around $1.436 billion worth of Bitcoin, which obviously has skyrocketed in value since the asset has been on fire lately. In fact, when looking at the stock chart, we can see that over the past 6 months, shares have increased by around 192% at the time of filming this video. But to be honest, I personally would not hold either of these crypto funds for a couple of main reasons, the first one being the management fees. Taking a closer look here, we can see that the management fee for this fund is 1.95% calculated daily, which is crazy high, especially considering the fact that they're essentially just buying a bunch of Bitcoin or Ethereum and then holding it on your behalf. This isn't a fund where there are fund managers actively trying to provide the fund with alpha to beat the market, like for example the ARK Invest funds, where these are active exchange traded funds. A $10,000 investment in the QBTC fund would cost you just under $200 in management fees, and that's in the first year, and then over time this would compound significantly. With that said though, you could say that there are some pros to these funds, including the fact that you can get easy diversification and exposure to crypto assets, and if you want to, you can actually hold and gain exposure to cryptocurrency in a typical investment account, even a registered account like a TFSA, for example. But to be honest, I would think twice before investing into either of these funds, and I would sooner just purchase Bitcoin or Ethereum in a standalone wallet. Cryptos aren't like traditional stocks where yes, some stock brokerages will allow you to buy fractional shares, but with a crypto asset, you can divide them up into literally tens of thousands of pieces per coin. And so for this reason, even though let's say one Ether is trading above 2,000 Canadian dollars, you don't have to shell out $2,000 in order to buy some ETH, because you can actually buy a micro fraction of it. And therefore, if you only have say $100 or $200 to invest, you can do this very easily on your own. So really, those are just my general concerns about an ETF like this, where the management expense ratio, in my opinion, is really high for a passively managed fund that actually is closed-ended, and they're just holding BTC on your behalf. What's to stop you from actually doing it in your own wallet? Pretty much nothing. And so for that reason, I would recommend buying ETH or Bitcoin on your own with one of the platforms previously mentioned in today's video, but that's just my opinion on the matter. And that pretty much wraps up today's quick video. I just had so many people asking me which platform I use, and so hopefully this video was of value to you. If it was, make sure to smash the like button. It really helps the channel out, and also check out the link down in the description to open a BlockFi account, and you can get some free money for opening and funding your account in order to start investing in cryptocurrency and making some annual interest on the holdings. Also, make sure to subscribe and hit the bell button for new and upcoming investing content. I try to post 3 times a week on this channel about a variety of different topics, including stock market, real estate, and maybe a bit more crypto in the near future. We'll definitely see, so make sure to stick around for that. On that note, thanks a lot for watching today's video, and I'll see you in the next one.